Ladies and gentlemen, good day and welcome to the Heidelbergcement India Limited Q4 FY22 and FY22 call hosted by PhillipCapital India Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vaibhav Agarwal from PhillipCapital India Private Limited. Thank you and over to you, sir.
Yeah, thank you, Stephen. Good afternoon, everyone. On behalf of PhillipCapital India Private Limited, we welcome you to the Q4 FY22 and FY22 call of Heidelbergcement India Limited. On the call, we have with us Mr. Jamshed Naval Cooper, Managing Director, and Ms. Shanvi Sharma, Chief Financial Officer, Heidelbergcement India Limited. I would like to mention on behalf of Heidelbergcement India Limited and its management that certain statements that we made or discussed on this conference call may be forward-looking statements related to future development and very current performance. And these statements may be subject to a number of risks, uncertainties, and other important factors which may cause the actual developments and results to differ materially from the statements made. Heidelbergcement India Limited and the management of the company assumes no obligation to update or alter these forward-looking statements, whether as a result of new information or future events or otherwise. Also, Heidelbergcement India Limited has uploaded a copy of the Q4 FY22 and FY22 presentation on the stock exchanges and its website. Participants are requested to download a copy of the presentation from these websites. I will now hand over the floor to the management of Heidelbergcement India Limited for their opening remarks, which will follow the rapid Q&A. Thank you and over to you, Reporter.
Thank you, Eva, and for hosting this investors call. And first of all, let me thank all the participants who have joined and taken out their time to attend this call. I suppose you would have received our presentation, which has been posted already. Coming to the first page of it, which you have already read, which says we are talking about ESG projects, alternative fuel projects and solar power plants, which we have commissioned very recently. And we are on the path, on a trajectory towards greener and a much more efficient energy utilization system. So which we had planned on the long basis, and we are continuously, as of now, today we are close to about we are more 23-24% of our total is green power for the company, and future it is targeted to go to about 30 plus. Cement capacity utilizations we have increased, and we are now talk about later on also. We are right now at hovering around 76% utilization. Last time you had this issue that we had dropped down, but yes, because of the capacity now we are recovering that. Continue to produce the 100% blended cement. As you are aware that we do not produce OPC, and which is one of the rare companies which in the cement Indian space which believes that we have to take care of our planet also. Today many constructions don't require it. Anyway, we can talk about it later on also. Green power, which I said already, 23%. EBITDA is 910 per ton. We have tried to do our best. We could have still done better had fuel and coal, power and fuel had been a little sympathetic towards. We repaid our third finance transfer of non-convertible, so we are now a debt-free company. You will see the interest cost coming down to 0 now. Then we have a good amount of cash balance, close to about 380 crores. Am I right? 380 crores is in the cash, and we continuously augment that also in the. We'll talk about that later. Then board has recommended, based on the cash flows, future anticipated cash flows, the board has recommended to the for the AGM to the shareholders a dividend of 9 rupees per share. We'll talk about this later also in detail. And we continue to operate on negative net working capital. Moving to the next slide, which is there. So on the clinker factor, we are at 0.4, being a blended cement company. I think this is a rare distinction in the cement industry. Those people who are making slag, for them it might be a little better, but in the PPC space, this would be probably one of the best we are trying to do in this. On the CO2, we are at right now 511 kgs per ton of cement, which is also, I would say, you will appreciate and accept that also, that we are here doing, the company has put its best foot forward. Coming to the water positive, we are about 4.4 on the water positive, and CSR, we have touched the lives of almost 35,000 people, and we believe that our CSR activities are bringing the smile on the faces of the local society. On terms of green power, we have spoken about 23. Taking you to the next slide, which is 5. We have the target to reach about 500 kgs CO2 of emission, from 511 to 500 kgs by 2025. The task is uphill, and it cannot happen without the use of AFR and renewable energy. So our focus is there. You can see a beautifully laid down solar power plant, which is now operational, and we are getting a very good plant load factor from this, and I am sure that it will go a long way in giving us the carbon credits for this, and it will be almost 250,000 tons of CO2 will get reduced in conserved because of that. So this is a very important step in the direction of becoming green, from green to greener. Coming to this footprint of the slide, you can see on slide 6. At Jhansi, we have just started our drawing power from a renewable, which is about 22 gigawatt-hour. And Narsingar, we are already, because with the WHR and things like that, we are almost close to 40% is green power, plus we have added another 5.5% megawatt of solar power to it. Amasundra is 90. Here we are writing on a safe side, but it is close to 95 plus, I would say, of power is green. Maybe it varies sometimes, but on average it will surely be 95 and above. When it comes to our growth of how we have grown in our green power, you can see that we have reached 23% of our total power in Heidelbergcement India, and we have a target and ambition to cross 35 in the near future, which is, and I would say the roadmap is clear, and the company has been working on it. So it is not a project we will see and we will come back to you in 25 and say that, okay, this did not happen or that did not happen. It will be delivered to the world. Next slide is towards slide number 7. We have our website that is a very unique website. It is called Friends of HC, Friends of Earth, where anybody who plants a tree and he or she can geotag it with their name and picture. So right now the maximum contribution has come from the employees and business associates for us. But in future we are wanting that more and more people should come and contribute to the the greening of this earth. I think as a generation we need to contribute more and more to our planet Mother Earth. So this is one of the initiatives in this direction. We can, if anybody has questions, we're happy to answer them. Coming to the business results are concerned. So if you look at slide number 8, there were questions that why have you dipped in your capacity utilization? We get a dip from 91 to 87, and because we did an expansion work, and 20 was a hit. So we had a hit in 20 because of the COVID, but then again we got the capacity. It came a little, timing was a little odd, but now again we are into back and trying to lift the bar and see to it that we reach back our 90%, but we are today at 76% given the market conditions and demand are there. And we do not want to put too much pressure in the market, although we can sell it, but ultimately it will come at a cost. On the slide number 9, you can see our 12 months of performance. We have compared it that on December, quarter on quarter, how it will fare. So from that, we are back on the trajectory. We pulled up our numbers in the month of March. It is just only a flattish comeback. and I think this trajectory will further improve in the months to come, in the next quarters. Coming on the profitability, would I say on slide number 10, it's a very clear message that this spoil sport has been power and fuel. Had it not been there, on all other parameters, the team has done a very good job. They have tried to conserve, they have tried to recycle, reuse, whatever they did it, and that is visible in our every effort of it. But sometimes certain things are beyond the control. And as we talk about also, our team is working on in some of our plants to how to switch fuels with maximum efficiency. So earlier the lag time used to be about 2 days or 3 days from switching over of fuels. Now we have come to a stage where we are able to reduce this time to almost 36 hours. And within 36 hours, the fuel change we can do without impacting the balancing of the kiln or disturbing the kiln. So this is what is happening there. If you look at the slide 11 of the slide, you can see very clearly now it is much more refined. From the micro numbers, you can see the power and fuel has gone down. You may have some questions, we will answer them, but these are the one-off items. Some of them, which are the tax incentive we got from the MP government, so that is one part of it. But yes, that was due to us, it had not been coming, so now it has come. So from now we are standing at an EBITDA of 961, and I'm sure that if the market has some good sentiments built up, this will go up in the future. For the whole year, you can see there's again power and fuel is one of the areas which is bad, but still we deliver 910 on this for the full year. So April to March from 910, and for the quarter it was 961. The balance sheet has been placed in front of you. If you have any questions on that, Anil can answer on the balance sheet part also. I think it is fair and simple. I don't think there are too many surprises in this, anything. It's a clean, very clean, neatly done balance sheet audited by our auditors. The question comes now on slide number 14. You can see the bank balance is what we have. The net cash is about 1.3 billion, 1.34 billion of cash we are sitting on as of 31st of March. There is a UP government to bring more transparency. This zero interest loan we have with the balance we have from the UP government for development of our expansion. That will be repaid in till 26. And how the payment year by year it is going to go, it's a very transparent place in front of you. What are the monies which will be taking off, and which are the ones we are right now. What is the debt position? We have placed here 460 is replicated on the right hand side. Dividend, coming to slide 15, I think your company has delivered starting from the first dividend after 20 years in 2017, gradually improving, not letting the investors feel let down. I think there was no interim dividend, so that was in one place we have placed it as 90% and of the dividends. I'm sure you may have questions about it, but based on our future cash flows and things like that, we recommend it to the board. The board has now recommended to the shareholders for their approval. Slide number 16, the story is that our little bit has been reduction on our road. It used to be going to 50-50, but now it has as the circumstances changes, rail becomes cheaper, so we went to rail. We are able to change this blend faster, not an issue. 46% is by road, and 62% of our coal, If you look at it, we have gone to 62% coal. What to do? Because petcoke becomes much and much costlier. Today, the petcoke price, domestic petcoke price is hovering around 20,000 rupees a ton. But on the gigajoule basis, when it becomes a cheaper source, then we switch to, again, it's not a question of this petcoke and fuel, it is also availability, which is a major issue. Many a times we are running into problems of sourcing our coal from domestic market also. So sometimes you have to use a costlier coal to keep the plant running. As long as you are able to keep your nose afloat, we are doing that. On blended, on premium cements, we have now reached 21. There is an improvement on the previous quarter. And on the trade side, there is a minor deterioration because our trade has declined to 80%. Earlier it was of around 85-86%. But I think this will keep going on. When the markets are a little softer or anything, we have to keep changing, but this does not really matter too much on our results. Coming to Patharia, some awards we would like to even share with you how our awards, our team takes pride in receiving the awards. So awards are, on CSR, we have got an award for our rural education. There is a lot of transformation we have done. We have done a lot of schools, Anganwadis, we have refurbished. So on education, rural education, we have really, and it is very heartening to see the smiles on the faces of the children who want to come to school. Normally school, not many people would like to come, but we have made the school so inviting that the teachers would like to come there. Even the children would like to come there, because now they are no longer the government schools which the government was. Government also has limited, and as a corporate we have contributed, just only supported, given a helping hand there to refurbish the schools and make them look decent and livable and happy. So happiness quotient has gone up. There on the integrated community development project also we have gotten a global award for CSR award. Coming to Patharia mines, this is again a feather in our cap. A quick succession year after year. The Indian Bureau of Mines has been appreciating our effort for sustainable mining. Very safe mining, sustainable mining. In fact, use of limestone rejects, the way we use reclaimed land, and then we do the forestation on that. These are some of the areas which are a question of joy for us. Our team also, as a matter of pride, that we try to make our workplace much more better. And that gets recognized by the government, and it feels further more nice. So on the demand situation, we are talking about demand situation. So you can see this pandemic. I think when we talk about the pandemic, when I move around in the market, when I see people without masks, I feel that India, the pandemic has gone, so it is of no meaning. Corona is gone from here, but yes, there is always a worry that we become complacent and then it strikes back. So that's the thing. But I think right now it's okay. The issue, the danger is that how the Russia-Ukraine conflict disruption goes, and it has right now had an impact on pulse. So fuel, what's next, we do not know. So one has to tread very carefully on this. I do not expect in future the coal prices to be coming down below $150 ever in future. That's what my feeling is, and that too also, if it comes, it may be somewhere around after 24 or so, it may come down to that, below that level. But right now it does not seem to be easing out. Fuel availability is remaining the challenge for us, and we try to see that we get the most optimum source of fuel. Cost pressures are there. What should I say today? When these prices of coal, it is almost, and fuel and petcoke, it is almost, some things have doubled, some things have tripled. Heat and other, these are temporary things, because you will have questions that, how is this quarter going on and forward. Yes, I'm just pre-warning, cautioning that, because of the heat, there could be a little bit of impact on sales in the little bit of this month or previous month. Marginal impact will be there. And because there is a slowdown of construction, because also of, we must appreciate that the steel has gone through the roof. and other building materials have gone through the roof. There is a liquidity crunch at the dealer end, so there is a little bit of concern there. Little bit of outstanding has increased marginally, but nothing to worry about it. We have a very strong, robust channel. We are sure about them. They have securities with us, so nothing to worry on the side of thinking about any bad debts or anything. Our company is fully secured and covered. Government is taking its measures. You will have some questions. Definitely, I will answer to you what happens after the reduction of coal, after the price reduction of diesel and petrol. How does it impact us? That I can answer to you as and when you want it. But this is as of now from our side. Anil is with me, our CFO Amit and Sabun are there to answer your questions, whatever they are. To the best of our ability, we will give you a most transparent view of whatever you need to know. Thank you very much, and thank you once again for all the support you people have been rendering to our company.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. The first question is from the line of Shravan Shah from Dolat Capital Markets. Please go ahead.
Thank you. Sir, first on the demand front, so as you mentioned, the other building material cost which has increased, including steel, and the heat also impacting. So in this April and May, how do you see the demand? So will it has impacted 10-15%? Any number you want to throw? So just trying to understand. So including normally fourth quarter remains robust, and the first quarter normally we see a decline in the volume. So just trying to assess the decline on QOQ in the volume front for this quarter.
So, I would say there is a negative impact on volumes as of now as we speak. We were expecting that, just a little bit of showers comes in and then it should again boost. There is a little bit of slackness in the government demand because some of the monies the government had spent during March, I think they are still able to not, the next flow of funds has not come from the, panchayats and other places which draw a significant amount of cement. So there could be a 15 to 20%, you can say, a hit. Seems to be on an industry basis. I cannot tell you. I will give you more of on an industry basis. That is what I can figure out. It can, for some, it may be ranging to even 30 also. But let us see, because the month is not yet over. Today we are just as we speak. Demand seems to be somewhere coming up. In some markets it is coming up. Some markets it is becoming stagnant. Let's wait and watch. I think June will be good.
Okay, good. Sir, on pricing, so post March, how much price increase we have taken in April and May, or from there, or maybe from average? How do we see how much price increase we have taken, and any further price hike attempt would be there in the remaining 1 month so?
Price is more or less flat as of now. Minor increases come here and there. Some increases will definitely be there in, because June is the business starts a little bit better.
Recent price increase
into my final improvement.
Question is about the March part.
March quarter to March, there is an increase. Yeah.
Sorry, sir. How much increase since March?
How much increase on it is there as of March? About 396.
So around 20-25 rupees per bag actually price increase has been compared to March quarter.
So since March average, 20-25 rupees price increase. Is it right, sir?
That's right.
Okay. Sir, now coming on the costing front, so definitely it is difficult to answer, particularly on the petcoke and coal, but still trying to understand what kind of a further increase, because this quarter definitely a significant increase we have witnessed. But still, at least for this quarter, how much more impact we can see another 10-20% Q-on-Q power and fuel cost. Is it fair to say that that kind of increase will be there?
The petcoke and coal prices even higher than 10%. So we have seen that they significantly petcoke prices increase. Just to give you the little bit idea about the petcoke prices, in the March quarter it was around 20,000 rupees per ton, which is now coming around 27,500 as we speak currently in the month of May. So the petcoke domestic supply, they took many hikes during the last few months, and the landed cost is coming around 27,500.
So for us, including the kind of a green share we are trying to increase, so for us in terms of the per ton, how much likely increase to happen?
We'll see. It depends upon how the power prices by the grid increase during this quarter, because Madhya Pradesh government has already taken few hikes in the grid prices. UP, we have not seen that kind of things, and at the same time we have been working on this renewable power. So during this quarter, that benefit also flow to bottom line. So there are mixed, the petcoke and the coal prices increased significantly as compared to March quarter. Power, maybe we will not see that kind of increase because of the initiatives on renewable power. So let us see that, okay, how much cost increase happened during this quarter and how much we will further pass on to the market.
Okay. Lastly, sir, on the capex and the expansion. So previously we were talking 500,000 ton of kind of a debottlenecking and the Gujarat expansion environmental clearance. So what's the status? When can we start spending on the Gujarat expansion? And then what would be the capacity by when it once we start? Will it come in 2-3 years?
So on the first of all, there is a debottlenecking and a little bit of improvement projects which we are doing that will get all triggered and all started coming by March, April next year. So this year we are doing some capex on that. We are working on this, and almost I think the ordering will happen by June, July, and we'll get on that. The second phase will happen of that in 24 with line 2. Where there is a small, debottlenecking, but there is some study which is going on, because whatever the benefits we are getting are right now not to our expectations. So we are doing still more additional study into that, and it is a 22,600 TPD line. We want to take it to 31 right now, 31 or 32 or 33. But let's see how it goes. Technical study is necessary in that. But line 3 we will take it up this year only. I mean, Gujarat project, that is, it is under now environmental clearances. So we have moved there, and I think it will take another 1.5 years to get all the clearances, and then we start building the plant. So it may take another 2.5 years, 2 years, another thereafter to get the plant up and running.
Okay. That's it, sir. Thank you. All the best.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Pratik Kumar from Jefferies. Please go ahead.
Yeah, good afternoon, sir. My first question is related to prior question on capex in Gujarat. As you mentioned, like it may take some time to start. Can you just elaborate a bit more on where we are currently exactly? I mean, a bit more details on that project. Are we expected to start that in FY25 or 26?
So we will do anything not before 24 mid or so. Or 24, you can sit by 24 mid. It depends on the clearances, how fast we get the approvals. Because these are not within our control. These are all government controls and clearances and approvals we have to get. So let us, right now it is at a very nascent stage. Once, we get approvals, then we will start investing on that.
Okay, so 24 mid we may get approval. After that, maybe 2 years.
before end we may start something on this 20 or maybe earlier also. It depends, how fast efficient the government system is.
Right. And sir, as we know that the global group has like sold assets in India for the reason of relating to ESG and carbon emission, etc. So is this something which our parent also worries about and which may restrict our growth in India or our M&A opportunities in India?
As of now, Pratik, I do not see any reason to worry for our company at least. Okay, our company on the ESG is very, very strong. In terms of if you look at our carbon footprint at 511 kgs, who will be able to compare them? Among the global, out of entire listing, this company is doing a marvelous job. So I don't think there should be a concern for. Plus, we have invested into all ESG related capexes gradually over the period of time. So today we have shielded our company from the spikes of becoming environment compliant. So today the company is in a much better poise in a situation. I don't think the group will ever think of an emerging market. At least Heidelbergcement, I don't think it is looking at any of these type of discussions at any point of time.
And sir, regarding cost, which you mentioned, the petcoke price have moved to 27,000 from 20,000 per ton. So this 27,000 will hit us in terms of realization in our income statement in Q2 or straight away in Q1?
It will in Q1 also some impact will come now because since we are buying at that price, that will impact. Because the inventory of fuel nowadays with any cement company is not more than upper limit is 25 to 30 days.
Right, sir. Thanks, sir. I'll get back to the queue.
Thank you. Participants, to ask a question may press star and 1 at this time. The next question is from the line of Peter Agnell from Kesima Wealth. Please go ahead.
Hello, sir. Good afternoon. Sir, my first question is that, sir, so what has been the petcoke prices during FY22, 21, 20 and 19, just to get an idea of what has been the increase?
So I'll tell you, petcoke prices, petcoke cost, if I look at it quarter of March 20, petcoke price was just 8,000 rupees. Okay, then you look at March 21, this went to 13,500, almost 13,600. And now this March, it was 20,000. And now the next lot is 27,000. So if you look at these jumps, this is where it is. So I mentioned to you that some of the things have, almost doubled and some have tripled.
Okay. Sir, in terms of raw material, sir, what is your raw material basket cost? What are the major raw materials and where are you sourcing them from?
Yeah, raw material maximum is limestone. It is our own limestone. Okay. Otherwise, there are small 3%, 4% is additive, which is for gypsum, and raw material is another is small laterite, bauxite. That is not too much. Fly ash. Fly ash is that is our standard suppliers contracts are there going on for years together. I think that is nothing big about it because those are more tied up sources. Fly ash is a more tied up source compared to other variables.
So just to understand, because of the raw material cost pressures which are expected, are there any initiatives in place to reduce the raw material cost pressure going forward in the light of keeping margins afloat?
Yeah, I cannot reduce raw material costs. I can only reduce consumption. But consumption also has to be to an extent that you can remove the flesh from the bone, but you cannot cut the bone.
Oh, true. And sir, so you had mentioned about the diesel price decrease. You mentioned it and asked you to throw some light on how it could affect.
I could not get you.
So the new diesel price which has come down. So
new diesel price. Okay, that will that is a small element that only goes into our yellow machines, diesel, and a little bit on our logistics cost. So it's about 2 rupees at best, 2 rupees a bag. It will reduce.
And then last time you mentioned that there are a lot of road contracts are given. So any light color on our Heidelberg, is it getting any major orders from road contractors?
We are not into OPC manufacturing, so we do not bid for that. We are a green cement manufacturer. So PPC in road projects are not preferred as per the government regulations. Also, you can use it in a. There are projects which have been done in this country with 100% PPC, also highway projects. But here, as of now, the road projects are using only OPC as mandated by the CPWD. So we don't supply there.
So my final question is, any capex guidance for FY23 and 24? That would be all. Thank you.
Capex is Anil.
Your question is 2022, 2023, or 24?
The next 2 fiscal years, sir.
So we generally do around 50 to 60 crore rupees per annum capex as a sustainable capex that will continue for the next 2 years. And as well, next 2 years we are going to do this debottlenecking project in the Madhya Pradesh, and that will be the additional amount. So we expect that maybe there will be around 40 to 50 crore rupees additional capex in the fiscal year 23. So put together around 100 crore rupees in 23 and another 80 to 90 crore rupees in the fiscal year 2024.
Thank you so much for your time, sir. That was very helpful. Thank you.
Thank you. The next question is from the line of Navin Sahadev from Edelweiss. Please go ahead.
Hello. Hello. Yeah, good afternoon, sir. Sir, just 2 quick questions. One is with this reduction in diesel price that has happened, are we likely to announce any price cuts? We have just, I think, Shree Cement promoters have made some interview statement some time back. So I just wanted to know if this is a general industry trend that since the diesel price was cut by the government to contain the inflation, so is there an obligation for the industry to pass on that to the consumers, at least to begin with? That was my first question.
So Naveen, this amount, as I mentioned to you, the impact is only 2 rupees. In cement industry, prices fluctuate by anywhere between 20 to 30 rupees. So I don't know, even if I tell today that, I have reduced prices, nobody will come to know also that what I have reduced.
Right.
So I can make any comment on that. Today, in a day, you can have a variation of 10 to 15 rupees. Today, I drop by 15 rupees. Tomorrow, I change it to increase by 3 rupees. It's a very difficult situation to, to tell you that, that whether this is going to impact cement prices. And let me put it for the benefit of all the listeners here. Cement as a component, okay? Cement as a component for the builder, as a builder, is just the impact of cost which has increased for a builder is 13.5% for all the building materials. Steel is one of the largest, which constitutes about 24 or 25%, 35%. And cement as a constitute, as a component, and that is just 0.1% of the 13% of cost increases which has gone. And if you want to see that report, I saw this report by one of our one of the builders. I think it is Loda, a group which has used that report. They have made a report saying that how their building material costs have gone up and what is and there you can see that cement is just only 0.1%.
Sir, my question was more on the general mood in the industry, in the sense, at a time when the underlying cost is shooting up, but the industry is not really able to take enough price hikes, and that's where the margin compression that we are seeing. So I was just trying to understand if there is a general inclination that since the underlying cost is up, we can continue to see some price hikes, or there is not enough.
Naveen, the prices right now should cross 500 rupees a bag, according to me. Today, cement still is at 300 and on an average 370 rupees. This was the price ruling in 2018, 19 also, and 2020 also, and 21 also. We are still at the same place.
Correct. So just one last question. Then, given the underlying costs that we are likely to, because we are halfway through the first quarter, so given where the current prices stay where they are and the costs that we are largely to budget in for Q1, directionally the margin should continue to be under pressure in Q1 over the previous quarter, right?
So that is under pressure, which will continue to be under pressure if the prices don't go up. How much can you get from what else now you are using your optimal resources? What else can you do? If the petcoke goes up today, petcoke earlier used to cost us something like just about 300 rupees a gigajoule, 270 rupees, 320 rupees or 360 rupees a gigajoule. That is costing today 780, 790, and now even some of them 900. So you have to pass on to the market.
Understood.
It is unfortunate, that the other commodities have gone up. It is this industry, because of the excess capacity, it has not been able to take increases because everybody wants to run the show and wants to keep the price. So anyway, the public is anyway benefited by the competition which is happening in the industry.
And Naveen, no doubt the cost has increased, but a good thing that during last 1.5 months, a slight cost we could pass on to the customers. Now we are middle of this quarter and we'll see that how this cost, or especially the petcoke price development happen in the remaining 45 days, as well as how the prices will move. If the demand sluggish will continue, yes, there will be some pressure on the margin, but let us see. Because March was also not the very good quarter, although it was better than December quarter, but not as compared to corresponding quarter of last year. So we will let us wait and watch how the margin improvements or the margin development happen during this quarter. For our company, yes, there are many good things happen during this quarter or is happening. Renewable power is supporting our cost. We have been increasing our alternative fuel consumptions also. So there should be some good things, but at the same time, cost pressure no doubt is there.
Helpful. Thank you. Thank you so much for the response. Thank you so much.
Thank you.
Thank you. The next question is from the line of Ritesh Shah from Investec. Please go ahead.
Hi, sir. Thanks for the opportunity. It's a couple of questions. First is, sir, can you indicate the fuel costing on a rupees per kcal basis for the quarter and on spot basis?
Kilocal for this quarter for the coal cost?
Yes, sir. Blended, basically, petcoke plus coal.
It's about 2 rupees 54 paisa per CV. Petcoke is 2 rupees 54 paisa. And coal is about 2 rupees 34 paisa per CV, which in the previous quarter last year, coal used to be 1.33 and petcoke used to be 1.72.
Okay, and sir, on spot?
Pardon?
Spot on the current rate?
Current rate will be much more. Current rate will be much more. We'll have to check it out. 2,700, 27,000 to nikalo on 8,200.
Sir, corresponding to 2.54 is 20,000, right?
It is now 3.38.
It is 3.38.
2.4 actually 2.54 reduced to increased to 3.38 rupees per kcal.
Okay, and on coal, sir?
Coal is also now it is coming around 15,000 rupees. So that is also has increased significantly.
Okay, fine. This is helpful. And sir, how should one look?
Almost 1/3 बढ़िया.
2 rupees 80 paisa, 3 rupees around is coming 303 rupees. When we compare the March quarter, the coal, petcoke and the coal prices in any case increased by around 20%.
Correct. Sir, how should one look at basically pricing when it comes to offsetting this cost, given we have monsoons in front of us? Are we confident of the demand? You indicated that we have increased prices after March. Will we be in a position to actually cover up for the cost inflation?
So, Ritesh, you must understand that when the prices go up significantly, then there is always a pushback from the customer end. Okay, so I always call it as a stabilizing phase. So it's like climbing a 100 ladder step. So at every 25, you will have a stop. You have to get up and stop there. So this is the industry is going through this phase. Soon or later, customers will realize that now cement is not going to be available less than 380 or 400 rupees a bag, and then they will again come back. Today they don't expect. Who will expect that steel prices will come to 55 rupees? I doubt very much. Okay, the steel prices will remain anywhere above 75, or say at least 70 and above. So, it is a question of wait and watch. With these type of fuel prices, you cannot afford to reduce prices any further.
Correct. Sir, a bit of a hypothetical question. So what the government did is they actually tweaked around the duty structure on steel. Obviously, the fear is next could be aluminium and cement. I understand basically you indicated 0.1% impact out of 13.5% increase in construction costs. Do you think there is any risk of government potentially intervening to curb pricing on cement? Given 900,000 rupees is also not a bad number if one looks at it. So the priority for the government might be a bit different at this juncture. Is there any risk over here where the government can potentially intervene?
Right. Why should a government intervene when they cannot stop the prices of all other commodities going up? How can you ask one type of industry to just be only becoming the whipping boy?
Okay, sure. And the last question is, sir, Gujarat capex has been pending since quite some time. I think our commentary has been that clearances is taking longer. So can you provide some more color on what exact clearances are still pending? Given I think our financial parameters is perfectly placed, balance sheet is awesome. I think the only thing which is a question mark is growth, organic or inorganic. If you could provide some more color on clearances on Gujarat, and will we be open for inorganic expansion given our balance sheet shape is pretty good?
So inorganic, answering your last one, inorganic, yes, always open. Coming to Gujarat, see, it's a environmental clearance. We have to get a TOR, okay, done. So that has got now approval. We had got, because the plant is coastal in nature. So CZR, coastal zone regulation is there. So CRZ is there. So this we have to clear, and now we have almost got it over. So we have got the approval for that also. Now it will take about, for the environmental study to take, it will take about a year. One season they full require to measure the impact of putting up a cement plant. So they will do all the studies through an agency, and then they will come up with the solution, because we have told them what is the size of the plant, what is the water requirement, what is the power requirement, everything is there. So we have given that in the TOR, and it will then once the study happens, they will take about a year, one full year to study it, and then the report will take about 3 months or 4 months, and by the time it gets finalized, then we get to final about a year and a half. In the meantime, when we see things are moving in the direction, then we will start working on our internal side also for land procurements and boundary creations and things like that. So those we will start doing.
Sure, sir. This is very helpful. So just last question. Any update on the Zuari merger? Is it something which is possible? How should one understand this, if not now, say 2 years out? Given it will be a simplified structure, I think and historically, if one looks at the history of the group also, I think they have believed in a simplified structure. Sir, how should one understand this?
I think, Ritesh, every time I have mentioned this, that yes, it is a doable project. It's only a question of financial, how do you engineer it financially. So once that engineering is done and there is no loss to the shareholder value, then we will take it. But yes, in the coming, you can expect it will another 2 or 3 years it will happen at best.
Sure. This is very helpful, sir. Thank you so much.
Thank you. The next question is from the line of Uttam Kumar Shrimal from Axis Securities Limited. Please go ahead.
Yeah. Thank you, sir, for the opportunity. Sir, my first question pertains to our fuel mix. You said our coal mix is around 62%. So how much is imported coal and how much is domestic coal in this overall mix?
In our case, it is 100% domestic.
Domestic. And sir, what about petcoke? How was the petcoke mix during the quarter?
So petcoke is also total domestic, and the petcoke is around 20,000 rupees a ton for the quarter.
Okay. No, sir, I want to know the petcoke mix. So 62% is coal and balance is petcoke in the end?
62% is coal, and petcoke is balance is petcoke.
Balance is petcoke. Okay. And sir, what has been our dependence on grid power? Because last quarter it was 32% on state grid and 68% was outside state grid. So what is the position right now?
So it is as we said that as we talk about almost almost Damo runs at 40%, close to 40% on WHR. Then we have this 5.5 megawatt of solar, and then rest is I would say 55% would be from the grid. Correct? 55.
65. Okay. And sir, what has been our lead distance during this quarter?
Lead distance.
Yeah.
Lead distance, nothing has changed. It is the same 360 and between 360 375 it remains.
There is no change in lead distance. We continue selling in the same market.
Okay. And sir, one last question on other expenses. Other expenses is down quite sharply this quarter. So what has been the reason for that?
So you see, in our case, in last time we explained the December quarter there was a big shutdown, and that's why the shutdown cost has increased. During March quarter, generally we do not go for any shutdown. So that's why you see the expenditure is compared to quarter on quarter there is a reduction. When you compare with the year on year, it is on the similar range. So the fluctuation in the other expenditure is from quarter to quarter only because of the plant shutdown of the kilns.
Okay, sir. And sir, what was the amount of incentive that we have received in this quarter?
Incentive?
Yeah.
This we have already given in our published result in notes. The total amount we have accounted for during this quarter is 300 million INR, and out of that 200 is pertaining to the earlier period.
Okay, sir. Okay, sir. That's all from my side. Thank you.
Thank you. Ladies and gentlemen, you may enter star and one to ask a question. Please note, this is a final reminder for questions, and no further reminders will be placed after this. Thank you. The next question is from the line of Rajesh Ravi from HDFC Securities. Please go ahead.
Yeah, hi sir. I have a few questions. First on the, could you share for the Q4, what is the trade sales mix?
Trade sales, Q4.
In Q4?
Q4 it was 80%.
No, that was for FY22, I suppose, the PPT mentions. For Q4, it would be?
75%. In Q4, it is 75%.
75%, okay. And sir, are we seeing any pressure in, because steadily our trade mix has been coming off. If you look the trend in last few quarters, from more than 80%, the trade mix is now from 80, it was 80-85%, and then till FY March and June quarters it was 83%, and now here it is close to 75%. So, any regional pressure that you are witnessing from other players, and that is why more push in the non-trade?
So Rajesh, this is a little bit of technical area. What has happened when we supply, there are certain rates we have supplied, okay, on a pre-fixed determined prices, but the material is the trade material only. It is a branded bag. He is sold to a bigger wholesaler, who retails. But in the segment, since we have a separate methodology, it is not an NFR bag. Okay. So we have not classified as per this. Otherwise, that is also a trade. So little bit of correction which we will do it in the statistics because the quantity in those categories have increased. And it is being measured into non-trade. So we will change those just nomenclature. Otherwise, more or less, I would say that it will not go 80% will remain, trade will remain, or it will plus only it will remain. Last month also we sold about 25,000-26,000 tons in this type of a transaction, which we will correct it in the next quarter.
Okay. Okay. And second, in terms of utilization, on the expanded capacity this year, we have around 76% utilization. So what sort of number you're looking at? You have operated at 90% utilization earlier. So what sort of number you're looking at? And, are there any risks to, operating at 90% utilization?
Yeah, I don't see any risk. The risk would be only that you run out of fuel.
Okay. Okay. And a few more follow-up. In terms of the fuel, sequentially you mentioned that fuel costs for you have gone up by 20-odd%. First of all, what sort of alternative fuel we have consumed or we expect to consume this quarter?
So in Damoh, we have set up an AFR which has started operating from December. Gradually it is ramping up. It is right now about 3.5% of TSR, thermal sufficient. For bigger, it is likely to be around 5%. That is what we have factored in. Going forward, next year we were going to take it to 11 and 12%. And thereafter we will try to go to 20, 22 and 23% of AFR in 24 and 25.
Okay. And current.
Let me put it very clearly that AFR is a little difficult business because AFR availability itself is a big issue.
Yes, agree.
Even bring it to the plant itself is a challenge.
Agree. And given the cost inflation 2020, second, is there any inflationary pressure you have seen? Even the electricity which you are purchasing from outside, 70% of your total consumption would be external power, right? On a company basis.
Power will go up, but since we have got up now tie-up for other sources from third parties, I think this will reduce or keep our cost at least lower. I would say if it is not negative on an adverse side, it will it will be a little better.
Okay.
It will be better for us going forward.
No, you're saying for the 70% which you are buying electricity from outside, you have a fixed price contract?
Not 70%. We are talking about this 22 gigawatts of energy.
No. That is obviously will help you. I'm saying the power which you're purchasing from grid and all. There is because of the rising fuel prices. What sort of cost inflation are there in the electricity cost? Purchased electricity cost?
MP has happened.
So Madhya Pradesh government has already revised the grid prices. They have considered around 3% hike. And this 3% hike will impact in this current quarter. But at the same time, there will be some savings. You rightly said that yes, this renewable power will support us. So we don't foresee any significant increase in the electricity price in the coming quarters. There another tourism hike, but it will not be significant hike taken by the state government so far at this point.
Okay. So whatever impact you and other players would be witnessing would largely be on the fuel side.
That's right.
Okay. And lastly, in terms of the central market, because you don't have any major expansions in the market, whereas Ultratech, ACC are coming up capacities, and few other players would also, your capacity in Gujarat would also not be operational before FY26. So what sort of business impact you're looking in terms of market share loss that you're looking at? How do you assess those situations?
So till another coming 2 years, we do not expect any market loss share. If you look at it, we have added capacity. We were running at 90%. Now we went down to after adding capacity. It appeared to be illusionary. It became to 72. Today we are getting back to 76. If we are going to market is growing at about 6 and 7% or 8%. If we keep adding to it, we have got another 2 years to even about 90%.
Okay. Great, sir. Yeah. Great, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Kamlesh Bagmar from Prabhudas Lilladher. Please go ahead.
Yeah. Thanks for the opportunity, sir. So one question on the part of incentives. So these incentives are expected to expire in Feb 2023. So is it the case, or expansion would be able to, get it extended further?
You are right. Our incentive is going to expire in February 2023 after completing 10 years, and thereafter we don't expect that it will be extended by the government.
Okay. And sir, like I missed on the part of your debottlenecking expansion in central region. So can you please repeat the figures and quantity on that?
It is about 300,000 tons of additional capacity will come out of this from our change in line 2 and 3. And it will be about something like total investment over 40 crores.
In phase 1.
Phase 1.
And then thereafter maybe equal amount or maybe little higher in the phase 2. That will be in 2024 calendar year.
So 3,000 TPD of clinker addition?
It is clinker.
Okay, 3,000 TPD, which is around 1 million ton additional clinker we will be able to get from there.
Half million cement.
Okay, so I thought
clinker will be
300 tons or 3,000?
300,000.
For 300,000 per annum clinker debottlenecking and equal to 450,000 to half a million cement grinding capacity. And at the same time, when we talk about the debottlenecking, we are talking about some allied also process like on account of picking or dispatching. So those also gradually we are taking up, so that tomorrow once we have the grinding, once we have the clinker, then there should not be any constraint on the dispatch side or packing side. So the figure which we are talking about, the capex amount of around 100 crore rupees in the coming 3 years, including all these kind of small debottlenecking on the old processor.
So 100 crore would be including your maintenance capex, or it would be primarily on these debottlenecking projects?
Debottlenecking. I am talking about the 100 crore rupees which is debottlenecking, in addition to our normal capex of 50 to 60 crore rupees per annum in sustainable capex.
Okay. And we expect it to commission by mid of CY24 or like when do we expect it to?
It is mid of 23, early 23. And then the next one in 24.
Okay, and in total around 300,000 tons of clinker and 500,000 ton of grinding capacity. Yeah. Great. Thanks a lot, sir.
Thank you. The next question is from the line of Aman Shah from GT Investments. Please go ahead.
Hello. Hi, sir. Thank you for the opportunity. So I just wanted to ask.
If you can take the phone off speaker, please.
Hello.
Yes, sir. Please proceed.
Yeah. Oh, thank you for the opportunity. So just wanted to ask from an organizational standpoint, say on a medium-term basis, we are seeing a change in the industry structure with the addition of a new player and then exit of the existing player. The price at which the assets are bought, do we think this should lead to change in the sectoral profitability, say from a medium-term point of view, given that the buyout is also possibly on a leverage basis for them?
If I'm understanding your question, you're talking about the recent acquisition of Lafarge Holcim. Am I right?
Yes, sir. Yeah.
And the emerging scenario post that, correct?
Yeah. On a medium-term basis, just on a qualitative basis, do you feel that since that assets have been bought at some $160 a ton, will this lead to improvement in sectoral profitability?
So, if you pay higher, then you have to earn higher also. To get the cost of capital there, you'll have to really require a very high level of EBITDA coming out of it. So, the responsibility on the player itself would be enormous. I would say it would be a, what should I say, it would be a sleepless night for a person like me. If I would spend this money, then I would be in a hurry to get the money out of it. Prices should look up.
Okay. A counter to this, would it be like since EBITDA is reasonable enough for the top players, the new capacity are being created on a brownfield basis, so which reduces ultimately capital cost. which would keep in check the current prices, just the changes would be commensurate to the cost increases. Would that also be a counter to any improvement in profitability?
I mean, we have to understand, we have to first arrive at a solution that what is the EBITDA required per ton. Okay, there is no consensus on it. Is 200 rupees EBITDA per ton good, or it is that 1,300 is good? We have to understand that. We have to first come to that consensus. According to me, at 910 or 961, I am not comfortable. Okay, the EBITDA should be crossing somewhere in it today. Today, if you want to really grow your industry and you really want to do some innovation and future, look at it from 2030 when you get the ESG will be totally on your head. Okay, the type of carbon capture and what you will require, what sort of what not. Okay, then you require in your step combustors, then you require in your pulse jet bag houses. All these are high capital intensive equipment which you'll have to start putting into the plant. Where will that capex come from when you don't have it? And the government is not going to stop at that and says, okay, now I am 10 milligrams, I am accepting a 10 milligram and you, I don't know. The 10 milligrams, the moment you do, what is the capex required? So you have to start building your organization now only, and you have to start investing. In my view, 1,000 rupees EBITDA is, I would say, on an average.
Right. Okay. Sure, sir. Thanks a lot. That was my question.
Thank you. We take the last question from the line of Shravan Shah from Dolat Capital Markets. Please go ahead.
Thanks for the opportunity again. Sir, couple of data points. First, the Gujarat plant in terms of the capacity clinker and grinding would be how much? Yeah, whenever it will come.
It will about 6,000 TPD kills.
And the grinding would be?
Grinding we'll have to segregate into two plants, because ultimately if I am putting up that line, it will be close to about 3.5 million tons of capacity, cement.
Okay. And sir, is it possible in terms of the green share? In presentation we said that we want to 35 to 40% share by FY25. So by end of FY23 and 24, this share from 23% green share, it will increase to how much?
About 35, we have mentioned 35 to 40, between 35 and 40. In one of the slides we have mentioned it already.
Yeah, sir, I am saying the same thing, 35 to 40 by FY25. So I'm just saying currently it is 23. So by FY23 and how much it would be likely, and by FY24 how much it will. So just trying to understand on a yearly basis how it will increase.
So I think right now we are not that will take its own time, because unless we put up some more solar power plants, or we invest into further solar power plants, then it's a different thing. But right now our focus will be to reduce the heat consumption or do the thermal substitution changeover. That will be our focus for 22 and 23 right now.
Okay. And sir, the way you said the trade share data number for the Q4, the same way the presentation is for the full year on the road and the premium. And so if you share the number for road share, premium share for the fourth quarter.
So road share, I cannot tell you how the road share will work, because how the diesel prices will move and what.
No, sir, I'm talking about Q4 FY22. So in presentation we mentioned for FY22 number, that number 46%. So for Q4, what was the number?
The total, 1 minute, the total lead distance here, freight and what is the total component of 56, 46.
The road share during Q4 is 46, rail 54%.
Okay. And the premium share will remain at because 21% is for full year. So for Q4, how much was the number?
Q4
FY22.
This is road share,
no? No. Premium share, what was the number for Q4 FY22?
Q4 also 22%.
22%. Okay. Got it. And sir, just the last clarification in terms of the date when we say in the presentation. So what number we are including? Because if I add the balance sheet number, the number comes on the lower side. So 235 crore date is the total of what numbers?
235 is the actual loan amount, interest debt loan amount. This amount slightly different than the balance sheet because balance sheet is based on the discounting of the present value of the interest loan. So first you receive the loan and that amount when you repay them as per the index, you need to discount it, and therefore this amount has been shown separately under the government grant.
Okay.
Repay the payment, then amount will reach to 235 crore rupees.
Okay. Got it, sir. Thank you.
Thank you. I now hand the conference over to Mr. Vaibhav Agarwal for closing comments. Over to you, sir.
Yeah, thank you. On behalf of Phillip Capital India Private Limited, we'd like to thank the management of Heidelbergcement for the call, and also many thanks to the partners joining the call. Thank you very much, sir. See you in now conclude the call. Thank you.
Thank you.
Thank you. Ladies and gentlemen, on behalf of Phillip Capital India Private Limited, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.